markets for Tesla has been crazy. I mean, the Tesla volume on Friday, I didn't see anyone comment about it, but it was over 300 million shares traded on Friday alone when Tesla went up like 11% to 180. And I also saw that 13% of all the options contracts traded, 13% of all the options contracts traded, all the exchange traded options contracts, that includes index options, which is like the S&P and the NASDAQ index options. 13% of all the options traded were Tesla stock options on Friday. That's like insane. I mean, what's going on here, Matt? Why
Yeah.
are Tesla options such a huge thing suddenly? What do you think's going on?
I think options with Tesla has always been, I would say, an overweight portion of the kind of volume mix between equity and options. Spot Gamma, Brent Kachuba, I think is his name, had another interesting tidbit from last Friday, that half of the options volume from last Friday, half of the Tesla options volume, was for that day's expiration. So, and 170 strike was the largest single strike. So you had a lot of people making like huge bets on a short-term kind of one-day move, which obviously paid off really well. I mean, those would have done incredibly well throughout that day as the stock
Yeah.
just continued to rally throughout the day. So I don't know. I mean, it's strange to have such high volumes, especially on such short dated kind of maturities. But that would also kind of make sense if you've got a lot of short dated call options. That would really, perpetuate a short term rally. And then when Monday, Tuesday comes around, it starts to give it back a little bit. So which we certainly saw at least yesterday. So yeah, I don't know. I mean, I think with the price being as low as it was, and with Tesla getting hit as hard as it did, I think there are a lot of people who are thinking that options are starting to look relatively more attractive, probably more attractive than they have in the last year or two. So yeah, I don't know. It always kind of surprises just the quantity volume.
Yeah.
You don't see this on like Microsoft or Amazon or anything like that.
No.
So yeah, it's interesting.
I see Harry Chu in the comments making a good point that it seems obvious now that the volume increase in the Tesla are attributed to the options market. I think there's a strong case to be made for that. Yes, last week that the stock volume going to 300 million plus shares on Friday is is the dog that had its tail wagged by the options market because so many options became in the money. Is that it? The dog that wags? I think I got it reversed. Sorry, I got the metaphor reversed. So basically, the
The tail that
options
wags the dog.
market, yeah, the options market is the thing that caused the stock volume to be at a record high on Friday, because there were so many in the money options that were sort of, I guess you could say, a mini gamma squeeze of some sort, which leads to lots of delta hedging by the market makers on the other side of the call options. So they have to like buy enough Tesla stock. And we've seen this before. Whenever I've seen these like kind of mini gamma squeezes or major gamma squeezes, the volumes just go absolutely nuts because I think the options market makers who are on the other side, who are caught in the gamma squeeze, I think they're the ones most responsible for the
Yeah.
super large volumes. I don't think like even institutional traders or retail traders, people just buying and selling the stock, like if they need to get into or out of a position of 100,000 shares or 1,000,000 shares, I think maybe they run an algo or do something. But I feel like the options market makers who have to gamma squeeze out of 1,000,000 shares of Tesla or buy a couple million, I feel like they do these algos, maybe these high frequency trading algos that maybe creates 10 million shares of volume for every 1 million shares they need to hedge additionally, delta hedge or something. I feel like their high frequency trading algos almost artificially inflates the volume so much. That's sort of maybe something I've been thinking about when I see these kind of squeezes happen with the options, resulting from the options needing to
Yeah.
be delta hedged.
And I haven't seen anything on the put volumes, but I know from like guys like Brad Munchin on Twitter has said he put on a lot of Tesla puts, I think right before earnings, and he obviously got smoked on those. And so
Yeah.
anyone who was buying puts. Well, the market makers have to be delta neutral on the puts as well. So when the puts start to become more
Yep.
worthless, or the delta
Yeah.
decreases on the puts, that also creates buy pressure. So you've got like a weird combination
Double
of like
whammy. Yeah.
the puts, decreasing, and so you wanting to increase your delta to offset that, essentially needing to sell or to buy, and then also needing to buy because of the calls. So it's a strange phenomenon, and I think it may have just been a kind of perfect storm of increase in activity on both sides of the equation to really cause this massive rally that we've seen in January.
Yeah. I mean, the big question is how many call options are still outstanding. I'm going to start trying to find that data. How many call options are outstanding for like February, March, for the, what's the open interest of the call options now versus, a month ago or 2 months ago, even? Like, is the open interest increasing of call options specifically? Open interest means like, how many
Yeah.
people are engaged in, what's the total net amount of contracts by, like, investors that they're betting on one thing or the other, that's sort of open interest. So I want to sort of measure that open interest of Tesla and see if it becomes a trend again, because I don't know what to think about all this option trading with Tesla. Like, on one hand, I'm like, wow, it's crazy. I did very well and you did very well with options trades, but I feel like, um, too much can be a bad thing. What's
Yeah.
the right amount of options trading before it becomes a poison to the stock, because it creates unnecessary volatility, or just too many people, ruining their lives, betting their net worth on call options, and then the stock comes down. There's just a lot of negative effects that can happen from too much options, I feel like, being traded in Tesla. And I feel like we're got to be close to that. If 13% of the options market in the whole country is Tesla stock options, I mean, Tesla's not 13% of the S&P. It's like 1% of the S&P, or 2% or something. Like, uh, I don't know. Something seems up with that. It just seems I have to think about this, but there's going to be some problems, I think.
So another thing I was just thinking of, just as we were talking, how to share this, because I was surprised. This short interest, can you see that on my screen?
Yes.
Look how significantly that ran up into January. I mean, this
Mm,
was really fat, like essentially zero short interest. And then, it was 20 million in early January, 20 or 52 million on the 23rd. And then it reached a peak of 73 million shares short on Friday. And so, like, people, that's
mm.
got to create some covering, as 75 million shares short. That's a lot. So there very well could be some kind of a short covering, in addition to all this gamma stuff that we've been talking about, that was potentially causing some price action there.
Yeah, there could be some amount of that. That's true. Yeah, I mean, these are types of. This is like, I don't know if I wouldn't call this technicals or technical. I don't like technical. When I think of
It's
technical analysis,
flows.
I
It's
think of
flows
looking at,
analysis.
yeah,
Yeah.
flows analysis. I mean, I think of technical analysis as like trying to create pictures from the charts, and like head and shoulders, or does that look like a flag and staff or something? I don't know, but or the what's the other one, the red cross or the death cross or something,
Yeah.
yeah, there's all these
Triple.
interesting weird. I don't like those technical indicators, but the
Yeah.
technicals of actual, like, what's going on with the options volume and the flows, I think, and the short interest, those types of indicators, I think, are important to pay attention to. Sometimes there's valuable signal in it. I mean,
Yeah.
sometimes there's not, but sometimes there is.
I
So, I
mean,
mean,
delta hedging is a very real issue that can become skewed one way or the other, that can lead to pretty significant share price movement. So
yeah,
that's not necessarily technical analysis. That it really
yeah,
is more of a kind of indication of how are traders or investors positioning themselves, and how might
yeah,
that kind of create a flywheel that can lead
yeah.
to really rapid movements.
One thought I saw, one thing I see in the comments from Alexis A is, well, I see T Nelly say you led on options, Emmett, and it matters. like Mary Barra, you led. So, but then I see Alexa A in the YouTube comments saying, "What do you mean there is going to be some problems?" And what I mean by this is there has to be some limit where options become kind of poisonous, or mess up and ruin the market. There has to be some limit. And what is that limit? I mean, right now, 13% of the options contract being Tesla. That's like very high. Like, what about? Well, let's just say hypothetically, what if it got so extreme that no one traded or held stock anymore, and everyone instead just bought and sold call options and just like that's it? Do you think that would be a good thing for the markets? I don't think so. I mean, that's the trend we're heading on, right? So somewhere between now and that point is there has to be some kind of, I feel like, is where it's poisonous, and maybe we've already crossed that line. I don't know, but it's just a dangerous trend, and I don't know how long it can continue before maybe regulators or it just becomes bad publicity for the media to see, like, so many people lose their life savings and a couple other people get rich because they timed it right. And it's almost like a major big lottery being created, and everyone's throwing their chips in the Tesla lottery. And you know, 80% of people are going to lose their life savings, but 20% of people will make, 10 times their amount of money. So it's a lottery in your favor, but it's not really what the stock market was made for. Does that make sense? That's kind of what I'm thinking.
Yeah, I'm kind of surprised to hear you having such a strong take on that. I would say, like, if you're putting your life savings in options, you've definitely got a problem. Like, that's not what that's for. But
Yeah.
it's for like small concentrated bets. I think when you have a view on the market, like we've had kind of
Yeah.
historically,
Yeah.
and so I think where I think options are actually valuable is, if there is kind of disagreement on the fundamental valuation, it can help price discovery. It absolutely increases volatility, but if something's drastically undervalued, it can kind of revalue things more quickly than if people were just kind of gradually accumulating stock over time. So I maybe have a less negative view on it overall, and I think, like, where we were in like late 2021, where you had really significant options exposure, then I think we've come down from the levels that we had there. And I think, frankly, we probably got the market probably got a little ahead of its skis on kind of the valuation for Tesla. So I think that might be a fair point. But to me, it's the movement that we've seen in the last month or so is not necessarily indicative of kind of sustained. Like, if we're 6 months from now and it's still like more than half of all the options market, I might tend to agree with you. But for a
Yeah.
short term kind of movement after the stock had already been beat up so badly,
Mhm.
I'm less concerned that that's a structural issue that's problematic.
Yeah. By the way, just 5 minutes ago, Reuters headline: Tesla considering a plant near Mexico City's new airport, says a Mexican official. Well, I mean, it's sort of we already have known that Mexico is an upcoming Gigafactory location. I'm pretty certain. I think 70% chance it's going to be in Mexico, one of the next one or two Gigafactories. I think Mexico's. I've taken Canada off my list. I think Canada's like 20% chance, but I think Mexico very high chance. Anyway, interesting little news item that just came out 3 minutes ago on Reuters on my screen here. But why don't we go into the earnings report reflections? And we spent a lot of time on options and stock volumes, but earnings report, that's the fundamental. That's the thing that drives this, that, rightly so, should be the thing driving the actual direction of the stock price and the supply and demand of owning shares of the stock. So what were your thoughts on that, Matt, of the earnings report?
Yeah, it was interesting. I mean, the first thing I'll say is the model that we went over last week was clearly over aggressive on some stuff. So
Yeah.
the kind of improvement in cost of goods sold, especially, that was probably the biggest thing that was off. So there's probably some reasons we were overly optimistic about that. I think commodity prices is probably one of the biggest ones. But it was a little bit surprising to me that, given the increased output of the plants, we didn't really see a meaningful cost of goods sold improvement. So that was one kind of takeaway. And summarizing the whole sort of thing, the numbers were slightly higher than what the market and what the street was expecting. So it's kind of similar to Q3, where it was like a modest beat, but there was a little bit of weakness in that. That credit sales were a big part of the overall earnings report, and like the tax rate was really low. So from a quality of earnings standpoint, it wasn't necessarily the best print. It wasn't bad by any stretch, but it was not like you saw those numbers and were just like, oh, Tesla's going to rally like 30% in the next 2 days.
Yeah.
So
I
I
thought the
found it
stock
kind
was
of,
going to take a hit. I thought the stock was going to take a hit after. I mean, I think you and I and most longtime bull, Gary Black, I'm sure, I think it seemed to imply that. But I think a lot of us sort of thought Tesla might take a hit after that earnings report, right?
yeah. Well, and that was the kind of interesting thing, because when the report came out a little after 4 o'clock Eastern, it was like bouncing up and down, but it was mostly down after hours. But then once the earnings call started and they started sharing some news on guidance, that's when I think the rally really kicked off. And frankly, that didn't surprise me, because I think even before the earnings report, I'd said on Twitter a couple times that like the number itself is not necessarily what matters, because like these are going to be old prices anyways. So Q4 is not going to be indicative of what Q1's earnings are going to look like. What's going to be much more impactful for the stock going forward is the outlook. And I think they did a really, really good job of kind of reassuring on the outlook side. So they actually gave guidance on volumes. They gave guidance, or they at least answered questions that were supportive of strong gross margins and operating margins despite the price cuts. And I think that was like all the market needed to hear. They're like, oh, okay, good. It's like sky's not falling. This is really
Yeah.
nice. So the guidance
The,
seemed to be much more important, and that's what caused the rally.
Yeah, I process it a little differently, I guess, my cause and effect. I think I feel like if I try to step back and listen to the other earnings reports and earnings conference calls, not all of them have been on the same level, and some are Elon, just rambling about full self-driving and how revolutionary it's going to be, over and over, and you know. But some of the earnings calls, I feel like Elon has said similarly bullish things, and the market still reacted negatively. And then we say, oh, no one believes Elon. He has to prove it, And I feel like that people could be saying the same thing about what he said on the earnings call. Like, oh yeah, he has to prove they're going to do 2 million. Why would they put 1.8 million if they really could do 2 million? I feel like the reaction of the stock was more a reaction of how oversold Tesla has become, in the last few
Sure.
months. It's just such an oversold name. Like there's all the week longs have been cleared out of Tesla. Like everyone on margin who owned Tesla, they're pretty much out of their margin balance now. Like everyone who had these long call options in the money, they no longer are in the money. They can't sell those for profits. They're all cleared out too. That's effectively like having a Tesla margin balance in a way. And so just the fact that Tesla was so beat up the last few months, I think, and the stock like got cut down by like 70% since like 3 months ago, So I feel like that's, almost no matter what came out on the earnings call, almost no matter how they reported earnings, I feel like if you had a bunch of parallel universes starting from that point, that the Tesla would be up to 170 plus no matter what on any of those cases. I'm not so sure that whatever Elon said really made a huge difference in the stock price. I just think like based on the volume and like this options craziness and just a crazy like rubber band spring ready to push Tesla back forwards on this event because it's been so oversold for so long. That's just my thought, if that makes sense. I don't know.
Yeah, no, I mean, I think there's certainly truth to that. The one thing that seems different, like Q3 was kind of a similar situation from like the actual numbers were kind of okay, nothing to write home about, but
Yeah.
not terrible either. But Elon was like talking about how it's going to be bigger than Saudi Aramco and like all these other things that were like bullish but vague.
Yeah.
And there's like all these comments of like, oh, like FSD drives me around Austin and does such a good job, and it's going to be really important going forward. Like
Yeah.
the analysts completely ignore that, but what they can actually put into their models is okay, margins greater than 20%. The take or the order rate is double production right now, so maybe that levels off, but we can model 1.8 million right now and feel reasonably conservative about that. And the operating margin and gross margin guidance that they gave, like there's actual inputs that they gave for the first time, which like the stock was cratering on the back of these price cuts. And there were people saying like, oh, if you just take the 25% gross margin or whatever that they've had historically and take like a 20% haircut on top of that for the price cuts, then like they're giving up half or more of their gross margin, which is like a crazy analysis, but that's what some people were doing. And so I think they kind of dispelled the worst of those gross margin issues. They gave actual guidance on the credits for the IRA, which I was surprised they did. So I
Hmm.
guess, they gave at least 5 like tangible data points that people can use to model 2023. And I think when you do that analysis, it's like, okay, the we're not going to be at like $2 of earnings per share,
Yeah.
with all these
Yeah.
inputs that they gave us. So to me, that
Yeah.
was what was different about this call.
Yeah. Yeah. I mean, I think Matt, you and I are a good combo. Like you get the fundamentals very strongly, all that really well, and that's ultimately what drives the stock one direction or another in the long term. But the short term, like day to day stuff, it's just so uncertain and unexplainable sometimes
Yeah,
of what's
that's
moving
true.
the stock that I
We
don't
don't
know
really
for
know.
sure. I'm just poking questions. I'm just creating like potential scenarios of what moved the stock yesterday or the day after or whatever because we just don't really know the day to day. It's like quantum entanglement is the analogy I use. It's like you just don't know what's moving it that one day. But if you zoom out, you can see what that thing is. But when you go to the subatomic level, it just looks like complete randomness. So that's what the day to day movements are like. Sometimes I feel like it's just really hard to say. And then you throw in this options craziness. It's just like a whole nother uh it's just a whole nother thing to try to figure out the day-to-day movements. So um yeah, I mean those are interesting takeaways. And the gross margins missed, we were talking yesterday, and a lot of that gross margins on our model we think we missed is because we haven't been factoring in the lithium costs as much as perhaps we should be, right? Is that what we're thinking?
Yeah, I mean that was one of the things that has really like I didn't. You kind of heard about raw material price increases, but
Yeah.
in the last couple of years, lithium has like 10x. So it went from being something in the neighborhood of like $300 or $400 per car to like 3 or 4 thousand.
Yeah.
So it's been like a huge cost increase that I wasn't really taking into consideration separately. And so, I'm sure you did have some kind of production efficiencies from Q2 to Q3 to Q4, but you didn't necessarily see the COGS go down. And I think, lithium prices is a big part of that. Now, they've come down quite a bit. At least the spot prices have come down from their peak. Tesla doesn't
Hmm.
necessarily buy at the spot, so we don't know exactly the makeup of kind of how all these, the prices will go going forward. But it does seem that these kind of sustained high lithium prices are probably here to stay for for probably through the end of the decade is my view, and it wouldn't surprise me if they ratchet back up. We'll see where that all shakes out, but
Yeah.
if you're going to scale to like terawatt hours, you need a lot more everything, but lithium especially.
Yeah, it's something you and I are trying to keep a close eye on, and we're trying to stay in contact with some people that are have more expertise on that than us. So yeah, certainly something to keep an eye on, the lithium prices.
Yeah, and just today on that note, I mean, GM announced a deal with Lithium Americas where they're making an investment in the company, an equity investment, and they're securing some supply from their Thacker Pass plant or project, which has not been approved yet, but probably will be approved this year. So GM's taken some steps to kind of solidify their plans. And there's Piedmont. I didn't realize Tesla actually had a new agreement with Piedmont to supply some lithium. So my
Hmm.
my sense is they're good for the next couple of years, but 2026 and beyond, they need some additional agreements or to figure out this clay extraction process that they've patented.
Yeah, and I think a lot of the answers to these concerns are going to be shown whenever Elon reveals Master Plan Part 3, which is all about scaling, right? And so I think these are all things
Yeah,
he is very well aware of, and the Tesla team are very well aware of, and have,
yeah,
I would assume, have plans to scale. And so I hope that March 1st, they is part of March 1st is Master Plan Part 3 revealed. Do you think that's likely or
yeah.
no?
I've been thinking that more and more lately. I mean, it's a little overdue. I mean, what was he teasing that like in October or something? He said he was writing
Like
it.
last
It
year,
was
early last year, I think, or something.
it
It's
was
been
even
brought up a
earlier than
couple
that. Okay.
times. Yeah, yeah,
Yeah, so like he's clearly worked on that, and there's probably reasons why he hasn't wanted to reveal it yet. But I would
yeah.
not be surprised at all if they do release that as part of the March 1st event. I'm
Yeah.
really looking forward to that. I mean, I'm getting more and more excited the more I kind of do some digging. I don't know if you saw this,
Yeah.
but Connecting the Dots had a good like video on the Highland Project Highland and what
I heard
that
about
might
it.
be.
I didn't watch it though. But what is it? Just like manufacturing technologies being revolutionized, sort of? Is that the gist?
Yeah, yeah, it's essentially, and it was kind of the idea that like the long term sustainable advantage of Tesla. They've always said they're manufacturing, and so it's not just like front and rear castings for the Model 3 like some people have speculated. It's an entirely new kind of change in the machine that makes the machine. So
Yeah.
yeah, there's some good kind of theorizing in there. We don't know obviously, but the speculation I thought was interesting. Um, but yeah, kind of coupling that with some of the stuff that Franz said in that recent interview, he's most excited about this new product that he's working on right now. I mean,
Yeah.
it's kind of exciting to think what they might have up their sleeve. And then Elon actually said something similar on the earnings call that their new products are incredibly exciting.
Yeah. Most of which no one has any idea about, or they haven't
Yeah,
shown. Yeah, I'm excited. It's just, it gets me excited and giddy. To be a long term Tesla investor. I'm just super psyched. Um, So maybe we'll find out more. The Project Highland could be just like revolutionize. Like I don't. Yeah, they don't want to reveal it. They're installing some stuff right now, apparently, according to Teslarati, some kind of manufacturing equipment already in Fremont for it. One speculation I've heard, which it seems possible, is that it's basically. Um, it's going to displace the Model 3, whatever this model, what it's like, it's not the Model 3, it's
yeah,
something different, but it's similar, but it's just like being manufactured complete. It's going to be the same quadrant, the same functional utility as the Model 3, and maybe the same similar size. Technology inside it will be very similar, but they're going to produce it, manufacture it in a very different way, like a single die cast mold, maybe, and like some other crazy stuff. Who knows? It'll be like an
yeah,
actual Matchbox car, just much bigger, And so they'll get the cost down to be like, instead of the cost of producing a Model 3 now is what, like 30 something thousand, 30,000.
yeah.
Maybe it's
A little higher, I think. Yeah,
20,000. Yeah, maybe it's 20,000
yeah,
to manufacture it. And so then they can sell them for, 28,000 instead of 38,000 or something. So that's my guess, is that it's going to be just a revolution of how they're
yeah,
producing the Model 3, and it'll be, slightly different,
yeah.
same
I
functionality, but
think.
different.
Yeah, I think that probably is right. But think how ridiculous that would be. Like if they have a $30,000 car, then after the tax credit, it'd be 22,500.
Yeah.
Like the economics, like how does any ICE car compete at that point? Even if it's a smaller bat, like maybe you only get 200 miles on it or like 180 or something like that.
Hmm.
But still, like it just it seems crazy to me that like any ice could survive that.
Yeah.
And I think he even made the comment that it's going to outsell 3Y, S, and X combined. Which if you're moving that far down market, I think that kind of makes some sense. So
Yeah.
yeah, I don't know. It's exciting times. I've been like the last 3 to 6 months. I've been in this habit of like bringing down my expectations for earnings based on price reductions and economic
Yeah.
fears and all that. I'm like, oh, I thought earnings was going to be up here, now it's up here.
Yeah.
So like I've been kind of like, all right, well maybe we don't have a whole lot of runway left. But then I start hearing about this stuff, and it kind of rekindles the reason I was excited about the stock in the first place. So I
Hmm.
agree, as an investor, it's super exciting to just think what they might be developing down the road.